Good day traders, this is Stefanos on behalf of Tixee, and in today's webinar we'll be giving an outlook of the market for the week of the 19th until the 23rd of September. First things first, looking at some of the highlights for next week in the stocks front, we had two major stock downgrades on Friday, one being FedEx and the other one being Adobe. Meanwhile, on the Forex front, we'll have not one nor two, but actually three interest rate decisions from members of the G7 next week. Before we get into all of that, the disclaimer first. As always, please note that all of the ideas discussed in the webinar are my opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So getting right into it, looking at stocks, as we mentioned in the intro, we had two major stock downgrades, one of them being FedEx, which we also discussed in this week's look back as well. Now the stock price of FedEx had one of its worst days on Friday after posting what was pretty much one of its biggest single day declines in its history after it fell by more than 20%. You can pretty much see it without even me showing you the chart. You can pretty much see the large red candlestick that was printed on the weekly time frame. Now it was expected that we'd see some downgrades, I guess, but it was actually downgraded by 5 different brokerage firms, among them being JP Morgan and Bank of America Securities. Now this drop also came after the company missed its Q2 earnings estimates. It didn't just miss only the EPS estimate, but it also missed the revenue. The EPS estimate was also missed by as much as more than 30%. So it was a pretty much bad week, I would say, overall for FedEx, given the decline just on Fridays alone. But if that wasn't enough, like we say, we had 5 different brokerage firms downgrading the stock. So this sell-off momentum could carry on well into next week as well. I mean, we obviously got the downgrades on Friday, so we still have some traders or investors that could still haven't reacted to those news yet and could carry on selling, potentially carry on selling the stock next week as well. Of course, we're going to be seeing with the open on Monday what the sentiment is going to look like, but for now things are not looking all that great for FedEx. So for now I would say it's a stock to keep on watch and see how it reacts to the news of the downgrades. So for the foreseeable future, it would be one where we could see volatility pick up a little bit, as well as seeing higher trading volumes. Now, other than FedEx, we also had Adobe, which I'll pull up the chart for as well. Now, it was also downgraded, not by 5 different firms. It was downgraded by 2 different firms. Bank of America Securities was again in the spotlight, as it was the one of the 2 that downgraded, and the other one was Barclays. Now, this could also be owed to the fact that investors are a little skeptical about the valuation of its planned acquisition. If you were tuned in with the news over the course of last week, you'd have heard that Adobe basically acquired Figma in a deal that was valued at $20 billion. Now, again, this is something that sparked some skepticism, and this can also be seen from the chart, as you can pretty much see that last week the stock was pretty much trading around the $400 mark, and at the very end of the week it was already $100 down, trading close to $300. And just like with FedEx, I mean, obviously it was a pretty bad week overall last week, but now with the news of the 2 additional downgrades, we could see some further momentum carry on over the course of next week. So these 2 stocks, I'd say, it would be good to keep on watch. Again, one being FedEx and the other one being Adobe, just to see essentially how they react to the news of the downgrades. And yeah, this is with regards to stocks for next week. Now, on the Forex front, we mentioned during the intro, things are going to be quite active, as we're going to have 3 interest rate decisions from member of the G7, and importantly, one of them being the US, as interest rates are expected to be hiked by another 75 basis points next week. And I will be looking at the economic calendar, which you can very easily find from tixee's website. All you need to do is go to the News and Analysis tab at the top here, click on the economic calendar. You find some filters here that you can use. For the sake of the video, we'll switch it to next week, and I'll set it for the high impact events. Now, you don't want to make note of the timing here because like we keep mentioning, it's going to affect the timings of the event that you can see here, and obviously you want to be looking at the correct times. Now, I also set it, like I said, to the high impact events. So you can see it's pretty convenient. It just highlights pretty much the most important news that you'd like to keep an eye on for next week. So looking at things on Monday, we have unemployment figures from Hong Kong, some production figures from Portugal, and production figures from Canada as well. Something to note as well is those little tooltips you can see right here, which are also very convenient because they pretty much give you an idea of the kind of volatility you can expect given the particular event in the hours following the release of the reports. Moving on to Tuesday, in the early morning hours, we'll have inflation figures from Japan and the meeting minutes from the Reserve Bank of Australia. During the regular EU session, we'll have unemployment figures from Finland, production figures from Germany and Poland, unemployment figures from Luxembourg. Then going towards midday, we'll have building or housing data from the US, which is going to be released more or less at the same time with inflation figures from Canada. And then moving on to Wednesday, we'll have unemployment figures from Sweden, inflation data from South Africa, and then in the afternoon, we'll have again housing data from the US, production figures you can see from Russia, and then coming to one of the most important events of the week, which is going to be the Fed's interest rate decision. You can pretty much see the volatility of how it's going to basically double if we compare it, let's say, to housing data. Again, the rate is expected to be hiked by 75 basis points, which is equal to 0.75%. There were talks about a 100 basis point hike. However, that was a little bit more unlikely since the chance of that happening was set to about 20 to 25%. Now, aside from the interest rate itself, don't forget you also have the press conference, which is going to be followed right after the rate decision, which is going to be pretty much 30 minutes after. And then on to the next interest rate decision, which is taking place on Thursday in the early morning hours UK time, which is going to be the one from the Bank of Japan, where rates are expected to remain the same. We then have some employment data from Hungary, and inflation figures from Hong Kong, and then coming to the third and final interest rate decision of the week, which is going to be from the Bank of England, where we are expected to see a 50 basis point rate hike, as you can see from the figures here. You can also use these columns because they're quite helpful. They're giving you the current figure and what is estimated, and of course on the day of the event you're going to get the actual figure being printed as well. And then moving on to Friday, we'll have some consumer confidence figures from the UK in the early morning hours, followed by inflation figures from Singapore, which is going to be released at the same time as production data from Finland. And then we're also going to end the week with the final high impact event, which is going to be unemployment data from Poland. Now, since we're also talking about the economic calendar, what you want to do is also, you can also switch it to medium filter if you want, as there are still some events that you might want to pay attention to. For example, trade balance figures can be quite volatile as well on certain occasions, depending on the currency that's being impacted. We'll also have some speeches, as you can see here, from the ECB's president, Christine Lagarde, which is also something you want to take note of. Regardless of you want to trade the event or just pay attention to what is going to be discussed. But also the other event that's going to be under the medium category is going to be the oil inventories. Now, if you're a commodities trader, obviously you want to pay attention to this, and you can see it's going to be released on the regular as per usual on Wednesdays, and you can also see the time of the release, and again it's going to be under the medium impact category. Now, aside from the oil inventory, As we mentioned, since we're also going to be having the interest rate decision from the US as well, then obviously anything that's going to be impacting the US dollar quite heavily, you want to be paying attention to if you're even trading commodities such as oil, because it is pegged against the dollar, so you're likely going to see some volatility picking up when the interest rate decision and the pros conference is going to follow suit as well. This doesn't apply just for oil, but also for gold, given how the correlation, the inverse correlation between gold and the dollar is even stronger. So yeah, you can pay attention to this event specifically for oil, but also don't forget to keep an eye on the interest rate decision, because it's also going to be impacting those prices as well. Yeah, this is as far as the economic calendar and the Forex, the main Forex events for next week. And lastly, we're going to be looking at cryptocurrencies and Bitcoin specifically. Now, it also felt the brunt of the ongoing strength of the US dollar. As you can see by the chart, it's set on the weekly time frame, and we can see that this was the past week, and the decline has been by close to 10%. You can see it from the figure at the top here, and also from the price chart itself, we can clearly see that it's fallen below the $20,000 mark. Now, if I set the moving average as well, as we can see, they're still both pointing towards the downside since pretty much the beginning of the year. We're looking at the 8-period exponential moving average and the 21, the crossover obviously taking place right here, where the 8-period crossed below the 21. There was sign of some retracements or recovery going on last week, as you can see here, because it pretty much rose by as much, which was 10%. But as we can see, it's pretty much already given back all of those gains, as once again it's trading down by 10%. It's still hovering around these key areas. We can see we had a strong bounce several weeks ago, and ever since we're pretty much trading around this level, and we just kind of bounced last week, and now again we're hovering just above it. So again, depending what kind of price action we get here, we could get one strong push to reach those levels, and if these are also broken, then the next ones to be looking at would be down here, which is around the $10,000 mark. But again, this will depend on what kind of price action we get around this area. Of course, if we get a pretty strong bounce, we could pretty much retest these levels back here. But nevertheless, it's a pretty good range to work off of. And just again, it's important just stay patient and see what the markets tell you, as we can gain a clearer picture as to what prices want to do next. And yeah, there you have it. This is as far as the outlook for next week's markets. I hope you enjoyed the video and you found it useful, and I'll catch you on the next one. Until then, trade safe.